Well, is there a correlation between the different economic measures and the re-election bid of the office of the president? That's what we're talking about today on Money Monday with David Seeger of Great Lakes Credit Union. Nice to see you, David.
Morning, Abby.
First of all, let's touch upon the market this morning.
Exactly.
Of course, the U.S. Stock Exchange is closed right now in New York City. Might be tomorrow, might be Wednesday as well. Who knows?
Exactly.
So how are things looking because of that?
Right now, this is what Europe is doing, and all the indices are down for Europe. Now, looking for the pre-market, would be the market indicators before the market would open, whenever it opens, either tomorrow, the next day, or the next day. The Dow is taking a beating, down 66 already, and that has dropped within the last half hour as well.
Oh, wow.
So there's a lot of anticipation here of difficulties and expenses as a result of the storm. The big economic news this week is unemployment to be announced on Friday at 8:30 a.m. And the market is anticipating 8.0.
Oh, wow.
Exactly.
Okay. Ooh, okay, so we'll keep an eye on that. Now let's go and talk about what different economic measures and the re-election bid, if there is a statistical correlation between those. Now, the big three economic indicators are?
They're GDP, gross domestic product, unemployment, and inflation. And that's what's talked about a lot during presidential elections or elections in general, and as a major talking points regarding, well, has the president done a good job or not done a good job? But there was really no statistical correlation when it comes to the historical precedents when it comes to the election of an incumbent president. And it all comes down to? The stock market, where that goes. There's a couple studies that was out, and the study that I'm referring to in the very beginning happens to be one that looks at the stock market and ties that to the re-election of the incumbent president. They went back 3 years and for the presidency for the election, and if the stock market was going up, that was a suggestion that the president would be reelected at that point. Now in this case, we're up 34%. Over the last 3 years. So that suggestion to be the current president would be reelected based upon this economic study. Based upon this study, then President Obama will be reelected. Exactly. And it says this number is not as robust as the 1996 election with Clinton, 63.8% increase. But still, it is an increase. So all of these statistics are saying that the incumbent will be reelected. Exactly. The only time that this did not work, this is interesting, was in the 1956 election with Eisenhower and Stevenson, and they attribute a lot of that to the Suez Canal crisis as well. Right, the crisis going at the time. And we also want to talk about Hurricane Sandy's impact on the market right now, and of course David Seeger joins us here on Money Monday. Nice to see you again, David. And how is the market being impacted by Hurricane Sandy? We know that the stock exchange is closed this morning. And maybe tomorrow, maybe the next day, depending upon the circumstances. Right now, the pre-markets are actually dropping. At last hour, we're at down 66, now we're down 76. So the market is feeling the impact of the storm and the financial consequences thereof. Absolutely, a big change in just the past hour, in less than an hour, really. Exactly. Okay, what we want to cover today is the correlation between different economic measures and the re-election bid of the office of the president. And basically, there's three economic indicators, and those are? The GDP, unemployment, and inflation. Okay. And the study actually looked at those three components because those are the three big ones that people think about and talk about when it comes to the re-election of the incumbent president or what have you. At any rate, they found no statistical correlation between any of those three variables. Okay. What they did find was a correlation between direction of the stock market. Basically, if the stocks are up, that means that there's a greater possibility that the incumbent will be reelected. And of course, if they drop, that means a greater possibility that the incumbent will not be elected. Okay, and how does that look for us this year? Right now, the stock market is up over the last 3 years, 34%. And so that means President Obama would be reelected. According to the study, correct. Okay, and we were talking a little bit earlier about it's not as robust a number as in 1996 with the Clinton era. Exactly. That increase was 63.8%, but still 34.8%. It is an increase. So these studies are saying that he will be reelected. Based on that correlation, correct. Okay, now how does the social mood of the country, you've brought that up, that does affect that stock market number? Exactly, because that's more of the causal part of the whole thing, to the extent that when people feel good and because the market's going up, well, that makes them feel good about themselves. The wealth effect takes effect, and people, swing voters and low information voters particularly, they vote not so much on facts but on how they feel. So consequently, if they feel good, well, then they'll vote for the incumbent. They think that is the causal effect why there's the correlation between the stock market, if it goes up or down, and the re-election of the incumbent. Okay, now
A lot of people are probably saying, oh, that's kind of those studies, but these are pretty strong studies, because the only time that this did not work was in 1956
Exactly.
with Eisenhower and Stevenson. All of the rest have worked with every presidential election. Anytime the stock market has been in the positives, the incumbent has been reelected.
Exactly.
Very interesting stuff here, David. And also another study involving the direction of the stock market as a predictor done by Stovall has proven to be a reliable predictor of things to come in the reelection of the incumbent. So across the board,
there's 2 major studies that would suggest that be the case.
Wow. All right, good stuff here. And of course, we're going to have this information on our website, northwestohio.com. David, thank you so much. You're going to have an interesting week to follow.
We are.